So start by defining your goals and metrics, measure your performance, evaluate your performance, and then manage results. Starting off, let's look at step one for early stage sustainability and reporting programs. The first part of this is to identify reporting requirements, whether they be regulatory, such as those coming from the European Union, United Kingdom, Canada, Australia, along with many other major markets, or from investor demands. There are several components to getting feedback. The first part is to conduct a materiality assessment, which in the most basic form can mean looking at the entire list of reporting requirements and identifying which ones you're currently collecting on, to what degree, who the owner of the data is, and then gauging materiality of the metrics for which you are not yet reporting. A big component with sustainability reporting is managing transition risk, or to explain it further, the transition from a current process or a conventional process to a more sustainable one. I know with the new regulation with Canada's major suppliers is to align with the government's goal of net zero by 2050. Setting the goal of net zero by 2050 could be what your company's goal ends up being. Hopefully a few years earlier than that will work. But from there, it's good to work backwards with science-based targets to create annual benchmarks that will provide natural goals to work towards as benchmarks. New materiality, such as changes that happen in your organization, like mergers and acquisitions, new products, new jurisdictions, they may impact what is material. So it's important to double check and see what impacts these changes to your organization might have. Do you have interest in expanding your voluntary disclosures? I always feel it's good to start with one when you're doing your report the first time, and then go into the second year. If you're completing initiatives that you have that are fully successful, then what is the next initiative that you have to take on when you're looking to develop new ones?
Yeah, Alex, actually, you touched on a few key points. The first one that I want to touch on is the expanding standard. So with a new company, with one of our customers who's new to reporting, they're starting to align with certain frameworks or certain standards. And like you said, it's good to start off with one and then during the second year expand to more. And that's exactly what we're seeing, to be honest. So we have one of our customers who last year did have a report, and this year they just kind of reevaluated the process, looked at what they reported on, and then from there looked at the SASB standard and see how could they align with it better.
Step two, we have measuring performance. And again, we're going to look at a less mature organization first, ones that might be developing their infrastructure for reporting and measuring. And you'll see at the bottom of the screen what is sometimes referred to as the golden triangle of people, process, and technology. It's a commonly used philosophy when working on different projects and processes, and it's no different here. What technology is used or can be used, evaluate your current tech stack, and look at perhaps a break-even point for adopting new technology. If, say, for example, you have a carbon tax that you're being held accountable to, if in September or October of a given year, you're getting close to that threshold that you need to stay under, are there ways that you can pivot to minimize your penalty at the end of the year or perhaps avoid it entirely? And so having this clear view and transparent view into your internal systems and processes continuously through the year is going to be very helpful in terms of monitoring when you're measuring to get to that goal of your end of year reporting. The people who are the most seasoned and most knowledgeable about this have been doing it for 20 years in most cases. Certainly there are more that have been doing it for 30, 40 years, but that's very much the exception. And with the trend of this type of reporting becoming so much more prevalent in only the last 6 years or so, it's important to be able to celebrate again and acknowledge all the hard work that was done in putting this together.
If a company is starting off with their reporting, this is, I would say, one of the key components to having a successful reporting period. It just ensures that everyone within the organization is on board and they all have the right mindset to provide the best data, gather it the best possible way, and have a good report.
If you think about building the infrastructure for data collection, holding folks accountable to their reporting, identifying and tracking progress for goals and benchmarks, and then producing reports on all of these, it becomes too much for any single person to handle as an add-on to their current job. Even if you might say that you're only going to use 80% of a full-time employee, if you're adding that to a current full-time employee, that's 180% of their job.
Alex, you and Marcelo could leave us with some key takeaways before I wrap up today's event.
I think it's important just to recognize that sustainability reporting is really a business imperative in a lot of ways. You're getting demands from a lot of different stakeholders, internal, external, regulatory, customers, coming from a lot of directions. And so good sustainability reporting is good business in a lot of ways. It's future-proofing you for your brand, for your reputation, and to prevent regulatory deficiencies.